Hey, Courtney Smith here, and I want to talk about AI stocks. Obviously, AI is going to be a major player in the future. There's over 100 stocks in the AI field, but very few pure plays in the publicly traded sector. So let's take a look at some of these stocks right now. They've been heavy in the news lately. Let's take a look right here. I'm going to start with two. There's really let's take a look at it. There's obviously a couple of big companies, Microsoft and Google, that have been in the headlines a lot with Bard and with Bing adding AI as well. Then there's the chip software thing. Companies like Nvidia are big. Their chips are used in AI applications. But I want to really focus on the AI itself. So let's take a look right here. We'll start here with Google and Microsoft. And you can see that the AI boom boosted the price of Google, and now it's starting to sell off over here. Let's take a look in the upper left at some of the fundamentals. Here in 2023, analysts are looking for a 9% increase in earnings, and next year 20%. The little green triangles mean that the estimates are going up. So that's bullish. PE of 20, pretty cheap. Do I want to buy it? I don't know. There's a lot better stocks out there as well. Let's take a look at Microsoft. And here we go. They got a little bit more of a boost. Technically, we were able to overcome resistance here. So from a technical perspective, the stock looks much better. Let's take a look at from fundamental perspective. Fundamentally not as good. Only 2% growth, and the little red triangle says that analysts are actually lowering their estimates for 2023 and only up 16 for next year, and the PE is 29, so it's actually more highly priced than Google. So this is technically a better picture, but fundamentally not as good. Let's take a look at C3.ai. Now, as they say, they provide services to build enterprise scale AI applications for organizations in data intensive industries. And you can see they've gotten a major boost in stock price on heavy volume. So technically looks very good. Fundamentally, they're losing money. Analysts estimate 74 cents this year, but only 35 cents last year. And the little green arrows show that they are increasing their potential profitability. So technically looks good. You almost have to look at this like a biotech stock. Like, can they live long enough to actually start making money? I'll take a look at the balance sheet later and check out. They probably will. They'll probably get so much funding because of all the publicity we've had recently. Let's take a look here at SoundHound.ai. Provides voice AI platform to custom voice assistant for companies to keep their brand, users, and data. Wow, okay. This sounds like something I don't want to work, but we'll see. Similar situation here, losing money, $1.39 this year, but only 29 cents next year. So that's a very sharp increase. The little green triangles show that analysts are increasing their estimates, which is also a bullish sign. Technically looks very good, exploding up on heavy volume. Let's go down here to Big Bear. Big Bear is a different type of company here. Operates as artificial intelligence and machine learning through an end-to-end data analysis platform. But I believe they make games. Once again, technically very strong here. Heavy volume, looks good, but they're losing money too. 55 cents this week, 28 next year. Green triangles are also bullish. So this one looks pretty good as well. And my last stock here is Veritone. Develops proprietary artificial intelligence platform, cloud-based artificial intelligence operating system, whatever that means. Now, they're expected to lose 38 cents this year, but only 2 cents next year. Green triangles bullish. So since they don't have any money, since they don't have any profits, there's no PE, same as the other ones. We've broken out, but this one's just not acting as well from a technical perspective. So here's my take. You can see the big boys, the Microsoft and Googles, have done well, and they have earnings a little bit overpriced, so I can't get super excited about buying them. The places where the excitement is going to come is in these pure plays. And I think that the one that had the best fundamentals was I liked SoundHound. They're cutting their losses dramatically. I thought that was quite good. Where was the other one? Big Bear. Cutting them in half. That was good. And was it C3? Cutting in half their losses. So these, like I say, you have to approach them as a highly volatile, like biotech stocks, similar type of thing. They have to keep developing the technology so it gets better, and they have to do a better job of selling their product. So these three, and let's take a look at Verify. Oh, I didn't show you Mobileye. Sorry, Mobileye. Mobileye was spun off from Intel back here. I loved the company. And this one looks much better, actually. Now, it's a PE of 58, but look at this. We have actually a profit this year of 67 cents and then up to 87 cents next year. That's a 30% gain. So here's a real profitable company. Once again, a bit overvalued. And what they do, Israel-based, develops autonomous driving technology, which of course is all AI, and it's publicly traded. So I like this one as well. Am I buying them right now? No. I don't like the long-term technical picture is good. They've been surmounting, they're making higher highs and higher lows. That's the first criteria you always have to look at whenever you look at any technical picture. But I'm going to wait for a better time to enter them. So we will be covering the AI space as it develops. This is going to be one of the bigger segments we've ever seen. This is the new crypto, the new marijuana stocks, the new, it's going to be one of those. So we have a chance to make a tremendous amount of money as the mania sets in. And then, of course, in a couple of years, we'll go short when the mania doesn't develop as well as they all expected and disappointment sets in. So that's our playground. That's what we're going to be doing. We'll talk to you later.